Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review some key stock indexes, talk about the bonds, of commodities, well, some commodities, mainly crude oil, talk about some currency pairs, and overall just review the markets. So yeah, let's go ahead and get into it. Alright, so let's go ahead and start by reviewing the US dollar index. US dollar index has broken the 74.80 level after having one small bounce, good enough for a very small scalp, and it has traded somewhat flat until Wednesday, but then it continued by breaking down and breaking the trend line. So again, this short slope seems to be a little sharper. I do anticipate this weakness to continue for as long as the Euro US dollar does continue to strengthen. Of course, now it is having somewhat of a pullback. And that's kind of like, I still think, myself personally, I think the Euro US dollar will continue to strengthen. I think that the dollar index will continue making new all-time lows. And, the Chinese yuan, what's basically going on is, and I'm going to go ahead and show you guys a chart real quick, is that the US dollar is weakening extremely. I mean, this is really fast, guys. But basically, the Chinese yuan is weakening at a rapid pace. Or no, not the Chinese yuan, but the US dollar is weakening at a really, really rapid pace to the Chinese renminbi yuan. Now, the yuan, geez, I need to learn how to say it right. But the yuan continues, it continues to strengthen against the US dollar. So right now, you guys are seeing a double whammy. You saw the Euro US dollar chart where the euro was going up drastically, and you also saw the Chinese yuan gain a lot of strength against the US dollar drastically. That's pretty much making the dollar index continue to go lower at an accelerated rate. And the main reason why is that Premier Wen Jiabao, at this point, basically said this: I'm going to make sure that I stem inflation. I'm going to do the best job I possibly can, and I'm going to use any measure necessary. And what he means by that is he's going to make imports for Chinese people cheaper. That is one way you can reduce on inflation. And you can see a direct correlation to the charts with his own statements, his own words. Words are very powerful things, guys. You guys have to pay attention to words, because words have huge impacts on markets. Words create actions, and the actions you're seeing right now is basically the US dollar weakening to the Chinese renminbi yuan, and you're seeing the euro strengthen to the US dollar. So overall, the US dollar is weakened against basically the other two biggest currency pairs amongst the major five. So it's pretty much the US dollar, Chinese renminbi yuan, and the Euro US dollar that's pretty much sending the dollar index into a death spiral. So again, you guys got to watch this very closely. I think the dollar index has more room to go lower. Now, because of that, I think that the Treasury bond market, as you guys can go ahead and see right here, is starting to have a decent pullback. Remember, when inflation occurs, or implied inflation occurs, bonds generally take a pullback, and the main reason why that happens is because the amount of yield a bond has to return tends to go up as inflation goes up. Investors aren't willing to pay up for a bond that only yields 3% in a highly inflationary market. So what basically happens is that bond demand goes down until interest rates are good enough for them to justify buying them based upon inflation. So again, the whole pattern I see with the US bond market, or the Treasury bonds, is that they generally like to follow the US dollar index. Usually. Not always, but usually. So therefore, I'm relatively bearish on the Treasury bonds. I mentioned that in my previous video as well. Now we're starting to see a decent pullback inside of the Treasury bond market. And again, it's no real surprise. I'm just being honest here, guys. A strengthening dollar would mean strengthening Treasury bonds. But a weakening dollar, an inflationary dollar, means weakening bonds. Now, the only thing that's keeping the bond market afloat right now is basically the Federal Reserve and how they're going about pumping money into the system. And the way they do it is that they buy Treasury bonds up. So basically, they accomplish two things. One of them is that it keeps the value of bonds up, meaning lower interest rates for corporate bonds, because corporate bonds can be issued at a lower interest rate in comparison to the treasury bonds. It also keeps the treasury bond market propped up, and it also pushes free money into the economy. So there are three reasons for how it works. Easy money, lower interest rates for companies, and you're keeping the bond market afloat. So basically the gains that people are making are basically kept, and they can turn around and sell it to the Federal Reserve. So again, it accomplishes three very important things, and that's pretty much what people want. They don't want to get stuck with losses. They'd much rather let the government get stuck with losses. So that's why I think the Treasury bond market, after permanent open market operations is over, I'm anticipating the Treasury bond market to eventually have a steep dive downwards. Alright, now as far as crude oil is concerned, I anticipate crude oil to go higher based on strengthening dollar, but I do want to point out that there is somewhat of a resistance at the 110.50 area. So you guys just want to watch that very closely. It could find some resistance, and it could be a decent scalping opportunity for you futures traders out there. Again, it's fairly clear that 110.50 is a really good area to anticipate somewhat of a resistance. Somewhere in this area would be reasonable. And of course, your next area would have to be 113. So anywhere between here is pretty much the clear open sky. And if we're not exactly sure where exactly you could ever find resistance in this area, because we have no previous area or reference point to make on this chart. Now let's move on to the next chart, which is going to be the volatility index short term. Judging by the positive momentum I'm getting, the information I'm getting, the dollar indexes continue to go lower. European stocks have jumped by around 1.5%, 1.5% basically, and Asian stocks jumped by around 1.3 to 1.5% on average. So again, stocks are strong overall globally. That translates into a much weaker volatility index. I've been short the volatility index today, and I have to say I'm pretty satisfied with where it's going. Now, I'm not anticipating the volatility index to keep going lower into May. I'm actually very cautious in May because of the sell in May effect. But for right now, I'm willing to stick with this short on the volatility index. And after all, volatility index does tend to go down 3 to 4 times in value faster than whatever the Dow component goes up by. So let's say the Dow Jones goes up by 2%. Chances are the volatility index will react by going down by 6%. That's just the way it works, guys. I'm not the one that wrote the rules, but that's just the observation I get out of the volatility index. Alright, so moving on, let's go ahead and move on to the next chart, which is Cliffs Natural Resources. Now, Cliffs is something I really like. I bought into it on a pullback, and the thing about Cliffs that really attracts me to it is the fact that we have this whole entire Japanese energy issue. Nuclear plant goes boom, it blows up, and basically your best alternative is coal, because, you know, it's readily available. It's not too expensive, although obviously nuclear power is less expensive than coal. But obviously coal is not a very social, nuclear energy is not socially popular right now. So that's what kind of makes me nervous as far as coal is concerned. Not coal, but nuclear energy. So again, I don't see much of a future in nuclear energy. I see more of a future in coal, at least for right now. Therefore, if I were to invest in anything, I would invest into a very consistent growth coal company, and that would basically have to be Cliffs Natural Resources. The ticker symbol is CLF. So this is pretty much a long-term investment if you want to have exposure to energy, but not crude oil. You want to go for an alternative aside from the crude, and this is probably one of your better alternatives. It's like the ExxonMobil that nobody knows about, because who the heck pays attention to coal companies? It's not like you're the power plant operators. But yeah, this is pretty much the ExxonMobil, or an alternative ExxonMobil, or ConocoPhillips. It's just one that you don't see advertised on a regular basis. Now, Apple. Apple is set to report earnings on Wednesday after the bell. Now, people are thinking that sales figures are going to beat expectations, and there's probably some based on some lawsuit papers. But I myself personally, I don't like the chart action I've been seeing lately. And we do have a negative weekly and monthly trade triangle. But that's just one part of it. There's a lot of negative factors. And I go over that in my previous video on Apple and whether or not it's worth the risk. But pretty much, I don't think it's worth the risk. It could probably go up for another day before earnings, but I wouldn't take it past earnings. And in all honesty, I really wouldn't risk it past earnings. I wouldn't take it into Wednesday night. And the main reason why I wouldn't is that if Apple were to screw up, you would see one of the biggest price declines in stocks. And everybody on Wall Street would be turned upside down. It would just be the exact same thing you saw with Microsoft 11 years ago. You would see the same exact thing as what happened to Microsoft 11 years ago. So again, I go over it in much more detail in my other video. But pretty much, if you're holding on to Apple for a short-term trade, I really wouldn't hold it past earnings. In fact, I would look for alternatives, and I'll go ahead and uncover those alternatives in another video. So anyways, I hope you guys liked what I have to talk about. I know my voice is a little messed up right now, but again, I'm really my voice is out of it. I've been recording too many videos lately. But anyway, take care, folks. I'll go ahead and see you guys next time. I'll have more for you guys in the coming weeks and months ahead. And if you guys want to use the same charting software, please be sure to go ahead and check out the link right below. Take care.